Welcome to The Deeper Dive, the show that unpacks the why behind the market's what. I'm your host, Alex.
And I'm Kristen.
Kristen, it's fantastic to have you back. Today we're tackling a sector that has felt more like a theme park ride than an investment for the past few years, semiconductors.
That's the perfect description, Alex. From the breathtaking highs of 2023 to the, white-knuckled drops and climbs of 2024 and 2025, it's been a confusing journey for many.
Yeah,
And it all centers on one fundamental puzzle. We all see the AI revolution happening,
right.
but why have the stocks of the companies building it been so incredibly volatile?
That is the core paradox, and to solve it, I think,
Yeah,
we need to go back to the beginning of the boom.
let's do it.
Let's call it the Great AI Gold Rush of 2023 and early 24.
Okay.
When generative AI models like ChatGPT exploded onto the scene, every major tech company on the planet had the same realization.
Hmm.
They needed an arsenal of high-performance GPUs to compete.
And in any gold rush, the surest bet is selling the shovels.
Right.
In this case, one company, NVIDIA, was selling the most advanced, sought-after shovels on the planet. Their stock price went ballistic, and it felt like it was pulling the entire sector into orbit with it.
Wow.
But this incredible success created a hidden vulnerability, a massive concentration of value.
Let's break that down for our listeners. When you say concentration, you mean the gains weren't spread out evenly?
Not at all. In fact, it was the opposite. Detailed analysis showed that the top 5% of semiconductor companies, you can think of NVIDIA for designing the chips, TSMC for manufacturing them, and ASML for creating the machines that manufacture them, were capturing nearly all of the industry's economic profit.
Hmm.
Meanwhile, the other 95% of companies, those making chips for cars, standard PCs, or industrial equipment, were largely treading water. It was a tale of two industries masked as one.
So the entire market sentiment became dangerously tethered to the fate of just a handful of giants.
Exactly.
That sounds like a recipe for the volatility we saw.
It was the perfect setup.
Wow.
And that fragility was brutally exposed in the first half of 2025. After that meteoric rise, the market suddenly hit a wall of fear.
Right.
The headlines shifted. We started hearing whispers of the semiconductor boom being over and loud warnings about the AI bubble bursting.
And that's the part that confused so many. The underlying demand for AI didn't just vanish overnight. What spooked the market so badly?
It was a potent cocktail of fear. First, a simple case of vertigo. These stocks were, in financial terms, priced for perfection.
Okay.
Their valuations were so high that anything less than a flawless earnings report was met with a swift and punishing sell-off. But the deeper fear was about the industry's historic demon,
Hmm.
the boom-bust cycle.
Right. The worry that companies spend billions to build capacity for a boom, only for demand to dry up, leaving them with a glut of inventory and collapsing prices.
Exactly. The market looked at the tens of billions being spent by Google, Amazon, and Microsoft and started asking a scary question.
Which was?
Quote, is this sustainable? It's like watching someone order the most expensive bottle of champagne at a restaurant.
Yeah.
It's impressive, but you can't help but wonder if they can afford to do it every single night. That fear of an impending hangover is what drove the mid-2025 correction.
But the hangover never quite arrived. Instead, as we moved into the second half of the year, the sector began a surprising and powerful recovery. What changed the story?
The story didn't just change, Alex, it got bigger.
Okay.
The narrative broadened beyond just data centers. The first new chapter was the AI PC.
Ah,
Suddenly, companies like Intel, Dell, and Microsoft were all talking about putting powerful AI capabilities directly onto the laptops we use every day. This created a brand new wave of demand for a different kind of chip, the NPU,
okay.
or Neural Processing Unit.
So the demand base was diversifying.
Yes.
It wasn't just a few big cloud companies buying chips anymore. It was potentially millions of consumers and businesses.
Precisely. And the second and equally crucial chapter was the dramatic recovery of the memory market.
Right.
AI models, especially in data centers, are incredibly thirsty for memory. But not just any memory. They need a specialized, high performance, and very high margin type called HBM,
Okay.
or high bandwidth memory,
As demand for HBM exploded, the fortunes of memory makers like SK Hynix and Micron,
which had been in a slump, were completely transformed.
so a wider base of demand from AI PCs,
Right.
and a healthier, more profitable memory sector.
The foundation of the rally was suddenly much broader and more stable than it was a year prior.
You've got it. And to top it off, the big tech companies in their late 2025 earnings calls, yeah,
They made it clear they weren't slowing down their AI spending. The arms race was still on. The market finally understood that this wasn't a short-term gold rush, but a long-term, multifaceted technological replatforming.
So, to recap the journey, the first wild ride began with a highly concentrated AI gold rush.
Right.
That concentration created fragility, leading to bubble fears and a sharp correction in mid-2025. The recovery was then ignited by the AI story broadening out into new devices like the AI PC
Yeah,
and a revitalized high-margin memory sector.
that's the whole arc. And the ultimate lesson for investors is that the term semiconductor stock has become almost too broad to be useful.
Huh.
You have to look deeper at the difference between logic, memory, and equipment, and at the specific end markets they serve to truly understand the why behind the market's what.
That is the perfect setup for our closing thought. Now, here's a question we'd like you to think about. The first wave of this AI revolution was clearly about building the infrastructure, the shovels for the data centers. The second wave appears to be about bringing that power to the edge, to the devices we use every day. As we look ahead to 2026 and beyond, is the biggest opportunity still with the companies making the silicon shovels? Or is the center of gravity about to shift to the companies who will use all this power to build truly revolutionary software and services? Has the real value capture in the AI economy only just begun to move up the stack?